Hey everyone, and thanks for shipping back into the Cryptoverse. Today, we're going to talk about why this crypto cycle feels so much different than the last one a lot of people experienced back in 2020 and 2021. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So, the first thing I'd like to discuss actually is the bracket challenge, right? So we do the bracket challenge every year for those who are interested in the NCAA tournament. I generally follow along with it pretty closely. And we got a pretty good turnout. We have 774 people that joined it. Remember, the winner gets a 1-year subscription to ITC Premium. So right now, yours truly is in 146th place. So I'm not doing that great. But we do have a few people down here that are in the lead with 150 points. So we got 1, 2, 3, 4, 5, 6, 7, 8, 9. So we got 10 people that are all tied for first right now. So congratulations to those people. Obviously, we're only halfway through the first round, at least by the time that I'm making this video. So we have a long way to go. But we'll check in with this as the tournament continues. So let's go back over here, and I want to talk again about, we did this video a few weeks ago. Okay, we talked about, why everyone's calls for, altcoins to outperform Bitcoin have been premature this cycle, and why this cycle feels so much different. One of the interesting things, and this is sort of a very sobering reality when you really start to think about it, okay? The number 2 cryptocurrency by market cap is Ethereum, and it's been number 2 for quite a long period of time. I would almost argue that the performance of altcoins is more so representative of whether retail will come back or not Bitcoin. The reason for that is, despite my best efforts to highlight the importance of Bitcoin dominance this cycle, there are a lot of people that are under the illusion that all altcoins will outperform Bitcoin in a bull market. And it's one of those things where you can't necessarily convince them that that's not true until they spend a few years watching it play out. One of the reasons that this cycle has been so different is because of monetary policy by the Fed. The sobering reality that I was mentioning a minute ago is this. Right now, Bitcoin is at 84K. All right? So 84K, all in all, not that bad. Now, obviously, if it's just a lower high, you'll look back on it and be like, yeah, but okay, fine. But in the grand scheme of things, Bitcoin's at 84K. Last year at this time, so if we go back to March of 2025 or 2024, Bitcoin was at 70K. Okay? If you go back to March of 2023, Bitcoin was at 27K. So it has been doing fairly well. So again, why do people feel like it's not? And like this cycle has been so different from the others. The reason is because of this. Ethereum. When Ethereum in 2022, in August of 2022, going into September, but in August of 2022, just before the merge, the price of Ethereum was the exact same price that it is today. Now think about that for a minute, right? Since mid-August, you're talking, you have August of 2023, August 2024, you're talking 2.5 years, and the price of ETH is the same as it was in basically the depths of the Bitcoin bear market in 2022. At around $2,000. Remember, let's look at this week, August 8th of 2022, for Bitcoin. Where was Bitcoin the week of August 8th? Right here. The highest it got was 25K. The open was 23K. So, the reason this cycle feels different for a lot of people is because there's a lot of people that thought all altcoins outperform Bitcoin in a bull market. And so fading Bitcoin dominance has not been a good thing, right, for those people. Because while Bitcoin is up here, the people that hold a lot of altcoins still feel like they're down here. That, I think, explains why sentiment is so bad. Yes, it's true, Bitcoin has done incredibly well in 2023 and 2024, but that sentiment is only shared by people that actually held Bitcoin. If you held altcoins, it's not the same feeling. Now, why is this? Why is this happening? If you look at the advanced decline index, right? If you look at the advanced decline index, I've made this argument for the last several years that we're in the phase of the cycle that is still comparable to what happened over here between January of 2018 and January of 2020, where the advanced decline index of the top 100 cryptocurrencies was actually in a downtrend, right? It was in a downtrend. During that downtrend of the top 100 cryptocurrencies, the advanced decline index, and by the way, if you're not familiar with the advanced decline index, you can pause the video here and read the description and the usage of it if you want, but basically it's calculated as the number of cryptocurrencies advancing minus the number declining plus the prior index value. So if more cryptocurrencies are going down than going up, then the ADI is going down. If more cryptocurrencies are going up than down, then the ADI would actually go up. So you can understand in this situation, why this cycle feels different, right? When you look at this chart specifically, you can see that this phase of the cycle never actually ended, right? It never ended. In fact, it just put in a new low on March 10th. Now, of course, there's always a chance that is the low, but I want to sort of dive into more, why this has taken so long to play out. A lot of it just simply goes back to monetary policy. And when you look at this chart, alt Bitcoin pairs. So when you look at total 3 minus USDT divided by Bitcoin, you get a chart that looks like this. If you look here at the range low, you'll notice that during the last 2 cycles, alt Bitcoin pairs went to the range low. In November of 2017, alt Bitcoin pairs found themselves at the range lows. Last cycle, alt Bitcoin pairs found themselves at the range lows in September of 2019. And then again in May of 2020, and then they wicked below it in January of 2021. But last cycle, it was way earlier in the cycle when alt Bitcoin pairs hit the range lows. This cycle, we're now almost a fourth of the way through the post-halving year, and alt Bitcoin pairs are still up here. It's pretty interesting, right? When you think about how different this cycle is compared to the last one. But then I think to myself, what about 2 cycles ago, right? And I look at 2 cycles ago and I see that alt Bitcoin pairs were at the range lows in November. Now, look, guys, one of the issues with this chart is that it doesn't go back further. It only goes back to 2017. Altcoins didn't really exist in mass in 2013, 2014. Yes, there were some cryptocurrencies, right? Absolutely there were, but there weren't a whole lot of them. So this chart, if you were to sort of draw it out further, it would probably look something like this, where it was down here, and then it comes back up, and then it goes up into this range. This is a very common pattern we see with individual altcoins against Bitcoin, where they have an initial capitalization and then they go into whatever pattern they're going to go to against Bitcoin. right? Where they go up. Look at ETH Bitcoin. This will tell you the whole story you need to know, right? So if you look at ETH Bitcoin, you can see what I'm talking about. This right here is just the initial capitalization of ETH against Bitcoin. So then it goes up here, and then people think it's going to go up forever, but it was just getting back up into that. It was in that range, and then ultimately it's bled back down. It's better viewed when you look at the market cap ratios, because supply ultimately matters. And if you look at the ETH Bitcoin market cap ratios, what do you notice? What do you notice? Anytime it's up here, everyone thinks it's never going to go back down here. And when it's down here, no one ever thinks it's going to go back up here. And you can see just how far it has come. So the thing to really consider here is what has caused this longer bleed. What was caused it, and why didn't it play out quicker? You could assume or postulate that the reason it has taken longer to play out is just simply due to all the money printing we had back in 2020. And because of that, there's been a lot more liquidity. It's been sloshing around a lot more liquidity sloshing around than we had last cycle. And because of that, last cycle, alt Bitcoin pairs went to the range lows a lot quicker. Another reason is maybe there's just more people interested in cryptocurrency in 2025 than, say, back in like 2019. That's also a possibility. So there's more liquidity now. And because there's more liquidity, the order books aren't so thin, and so it takes a lot longer for them to capitulate to the range lows. One of the things that I've highlighted before is if you look at the total balance sheet of the Federal Reserve, last cycle, it actually bottomed when quantitative tightening ended and QE began. Now, Jerome Powell has made it clear that QE is not beginning anytime soon, and not until interest rates are at zero. You'll see a lot of people constantly calling for QE to begin, but I think those calls are largely misplaced. There's a difference between quantitative tightening ending and quantitative easing beginning. It's possible to end QT without beginning QE. And I think that's the reality that everyone has to accept as well. That's not necessarily a bad thing. In 2017, we saw the balance sheet of the Fed mostly constant, and altcoins did just fine against Bitcoin. But the problem is when the wind is blowing in the wrong direction, alt Bitcoin pairs generally bleed. This cycle, the wind has been blowing in the wrong direction for alts longer than it did last cycle. And because of that, it's taking longer for alt Bitcoin pairs to bleed. You could argue that had alt Bitcoin pairs gone to the range lows in the pre-halving year, maybe quantitative tightening would have already ended. But they didn't do that. And they didn't do it probably because, as Jerome Powell said, there were ample reserves. So they're taking longer to play out. What's interesting is that the Advanced Decline Index looks kind of similar to alt Bitcoin pairs. A high, a low, a lower high, a lower low, right? And this is a high over here. You have a high, a low, a lower high, a lower low, a lower high, a lower low. Look at alt Bitcoin pairs. You see the high and the lower high, and you have a low and you have a lower low. When I talked about range lows, I want to be clear. I've always thought that was the optimistic outlook, right? Because to me, when people say that, a lot of people will say, well, that Bitcoin is sort of like the MySpace or the AOL of the cryptoverse. I couldn't disagree more. I really couldn't. The only reason the altcoin market even exists is because of Bitcoin. If Bitcoin doesn't survive, then the altcoin market is very, very likely not going to either. Whereas the counterpoint is not, or the counter view is not necessarily true, right? If Bitcoin survives, that doesn't necessarily mean that altcoins survive. Or at least that doesn't mean that everyone else's alt doesn't survive. Obviously, I'm not talking about your alt. I'm sure it's fine. So I think it's important to consider, why certain things are playing out, and actually it's starting to finally play out. Okay, and what I mean by that is what's going on, with the USD valuations of altcoins. So going back to what we talked about previously, right? Ethereum. The value of Ethereum right now is the same as it was before the merge. I mean, pause the video and think about that for a minute. That's why this cycle feels different for a lot of people. Because Bitcoin dominance didn't necessarily click for them. And now it's becoming more obvious, right? But what did we talk about? What did we talk about a few months ago? The way that monetary policy changes is by getting pain in the market, right? We talked about that many, many times over the last few months. And we said that there's likely going to be weakness in the market between February OPEX and March OPEX. Well, it's basically March OPEX. We're almost there. And there's been a lot of weakness in the market, Bitcoin's dropped a lot. ETH has dropped a lot. Even the S&P 500 has dropped a lot during that time. And there's plenty of examples where the weakness ends in mid-March. So it's possible that you get a bounce and that's sort of a local low for a little while. But there are times when the weakness persists for 1 to 3 weeks after March OPEX. There's times where that happens. Now, I don't have a crystal ball. I can't tell you if that weakness is going to persist. If you told me for a fact it was going to persist, I could easily come up with a narrative for it. It could be due to the tariffs that are probably going to go into place on April 2nd. And it could be due to the macro data that's going to be coming in early April. In 1973, it was actually the next inflationary data point that was really bad. If you go over to the Macroverse and you look at inflation year over year, and you look at the 1970s, the big jump by inflation happened from February to March. But remember, we're 1 month delayed with inflation data. So in April, we're going to get the March data point. So this is what I would say, right? I mean, if the weakness persists, and here, what do you notice here, right? The market dropped there into late March, and then it ultimately found support for a little while, but ultimately inflation back then was not transitory, and it continued to go up, and then the market went down. You see what happened back then? The market slowly dropped as inflation went up. That's probably the main reason for the weakness, one of the main reasons for the weakness right now. Yes, February OPEX to March OPEX is usually not a good time. There are times where the market goes up, but I mean, if there's any weakness in late February, then there tends to be weakness for like all of that month, right? February OPEX to March OPEX. If there's weakness at all, it tends to be weak for the entire month. So I think that is also a contributing factor as to why, if it persists longer. And I talked about this a few weeks ago, or no, not a few weeks ago, a few days ago, that when you look at the advanced decline index for, say, the stock market, we already looked at it for the Cryptoverse, but if you look at it for the stock market, there was something that happened a few days ago where a certain number of stocks advanced over the ones that declined. And historically, when that happens, 50% of the time, the S&P 500 is lower 2 weeks later, which means that half the time it's higher 2 weeks later. So it's kind of a coin flip. If it's lower in 2 weeks, again, my guess is going to be due to tariffs, at least tariff discussions, or at least that's what the narrative will be assigned. And the good news, though, I suppose, is that in all of those cases, going back several decades, the market was higher 2 months later. So half the time it was lower 2 weeks later, but higher 2 months later 100% of the time in those cases. So there's kind of like a silver lining, but if the weakness persists for a little bit longer, that would probably be why. So the cycle feels different because the cycle has been different than last cycle. It has. And there's no denying that, right? I mean, it absolutely has been different than last cycle, because if you look at the ADI, the top 100 cryptocurrencies, it just put in a new low a week or two ago, a week and a half ago. In 2020 and 2021, this thing was just going up. You could literally, we could have put sticky notes all over this wall with every single cryptocurrency, and we could just throw a dart at it, and whatever one it lands on, you could have bought that altcoin, and there's a good chance it was going to go up because everything was going up. This cycle has been the complete opposite. If you took a dart and threw it at a board with 1,000 different cryptocurrencies, if you bought the one it landed on, there is a good chance it actually went down. If you had taken the dart in early 2023 and just pinned it to the board and put it on Bitcoin, that was how this cycle would have been easier. Because the market conditions never changed to allow for the cycle you remember to come back in 2020 and 2021. That never actually happened. But when you look at all Bitcoin pairs, you can notice that last cycle is not what is playing out this cycle in terms of the timing. But if you look at 2 cycles ago, the balance sheet wasn't going up. Right? It wasn't going up. And all Bitcoin pairs were somehow at the range low in November of 2017. Imagine that. Imagine if all Bitcoin pairs are at the range lows in November of 2025. Possibility, right? And there was a change in monetary policy recently, so we can't ignore it. We certainly can't ignore it. The Fed came out and said they're going to slow. Right here, they're going to slow the decline of the balance sheet. They're reducing the redemption cap on Treasury securities from 25 billion to 5 billion. That's a big drop. A lot of people ignore the second sentence, and they have their reasons. Maybe they think that it doesn't matter, and maybe it doesn't. But I'm just saying, from an academic perspective, it makes sense to say what's actually happening, right? There's a lot of accounts out there that are just saying QT is over, okay, or that it's basically negligible because they're just looking at this. Maybe if they want to say they think that risk assets will do better now because of that, that's one thing. But to say that quantitative tightening is over because they reduced this from 25 to 5 billion is somewhat nonsensical. Because if you read the very next sentence, I know that's difficult for some, but if you read the very next sentence, it says the committee will maintain the monthly redemption cap on agency debt and agency mortgage-backed securities at 35 billion. The Cryptoverse has kind of evolved into a weird place, because to even point this out on Twitter, people say all sorts of things. Like, you're not even allowed to point it out with people getting upset. It's kind of an uncomfortable place to be, where the truth as to what's actually going on is not welcome. The people that everyone likes are the people that are going out and telling you that, they're giving out these sort of false things where they're saying that China doubled the money supply overnight, where they didn't, right? They literally just changed the definition of the money supply over there. They were very obvious. They were very transparent about that. They said it many times, and then it happened. The charts updated, and then everyone on Twitter is freaking out. But it's like, guys, they said they're changing the definition, but those posts get so many views and so many likes because it's easier to spread misinformation and call for alt season than to actually report what's actually happening, right? And it's kind of frustrating, right? It's really frustrating sometimes because, I just want people to know what's actually going on, but when you point it out, it usually falls on deaf ears, right? They just want to point out that QT's over, but when you add in this, it's not really. Now, again, it's a different discussion if you want to say, well, maybe all Bitcoin pairs can do better now. But that's not the discussion they're having, right? They're just saying QT is over when it's actually not. Technically, you still have 40 billion rolling off a month. Also, by the way, I believe there's about 2.2 trillion in mortgage-backed securities. So don't expect that one to stop anytime soon. I mean, the last time the Fed slowed QT was back in May of 2021. They announced it for June, and you can see right here beginning in June, and they lowered it from 60 to 25. But you can see that the agency mortgage-backed securities were still at 35 billion. Just like recently, they kept that at 35 billion. So what's more likely to happen is this other one at 5 billion now rolling off. That one eventually might start to go up to offset MBS's going down. But that still likely wouldn't be net delta QE, because you would still have some form of quantitative tightening going on. If there's 2.2 trillion, I can't remember the exact number, but if there's like 2 trillion in mortgage-backed securities, it's going to take a while, right, for that to roll off. And I don't know if they're going to roll the whole thing off. Powell says they want to, but it's going to take a while. And so, just be aware of that. But nevertheless, there will be a change in it. And that's important to consider. And the reason is because if you were to look at, say, I don't know, let's go with a 50-week moving average. And let's look at the last time the Fed announced that quantitative tightening would slow. It was that week right there. One of the things you may notice is that when quantitative tightening was, when the balance sheet was reducing by more, all Bitcoin pairs were bleeding quicker. And then when QT slowed, all Bitcoin pairs continued to drop, but at a slower pace. And it's pretty obvious when you look at the 50-week moving average of all Bitcoin pairs. The angle of descent changed when QT slowed. Now, initially, just after the balance sheet slowed, the announcement, all Bitcoin pairs actually sold off. But they still didn't really drop a whole lot. That was there at 0.44. They went as low as 0.33 or so. Let's see. Yeah, 0.33, and now they're back at 0.4. But do you see how the angle of descent changed when quantitative tightening slowed? You can overlay the balance sheet of the Fed again here and see what I'm talking about, right? I mean, if you took a line here and just tried to sort of say, if that had continued, right, if this pace that QT was on had continued, then maybe all Bitcoin pairs would already be a lot lower. But because it came off of that pace, that slope, all Bitcoin pairs, the bleed slowed. It's like, what they say, it's like you're kind of coming in for a landing, as Powell says. It makes sense. It's a common sense approach to slow things down as you get closer to the destination. Because if you come in too hard, you could overshoot. And you don't want to do that. So what they're doing is they're trying to come in slower to the destination. So this is likely going to level off even more, still go down, still technically be quantitative tightening. But that still could allow for all Bitcoin pairs to get down there. Now, why is the Fed slowing QT? That's a good question. I'm glad that you asked it, right? It's exactly for the reasons we talked about, right? I mean, in order for them to slow QT, they need a reason to slow it down. Give them a reason to slow it down, and they'll slow it down. And we've been giving them a reason. The stock market dropped a lot. And you could argue, well, yeah, but the stock market also dropped in late 2023. It dropped about 10, 11%, which is basically right around where it just dropped. That's true. But it also took place over a longer time period. This was more like down only. Did you know that this down only period here in the pandemic basically is at the same time, right? The weakness started in late February. Look at this weakness. It started in late February. I mean, look, it's almost identical. The week where S&P 500 topped was the week of February 18th. Look at this. The week of February 18th is where it topped out right there before starting to go down. And then it bottomed out the week of March 23rd, which would be next week. So I'm saying if there's another drop next week, it could be going into sort of the tariff announcement in early April. But again, this was basically February OPEX to March OPEX. Approximately, right? Get off my back, right? Approximately. Just like this could be. And so the markets are starting to give the reason for the Fed to change monetary policy. And if you look at others divided by total 3 minus others, you'll see, and we talked about this previously, you'll see that lower market cap alts have broken down against higher market cap alts, right? They broke down here in January. And we looked at that back then, right? We looked at that back then and said, hey, if you overlay ETH USD onto this chart, ETH USD was finding support every time smaller market cap alts found support against higher market cap alts. But when they broke down, so did ETH on its USD pair. So you could argue that the relative valuation of lower market cap alts against higher market cap alts leads the USD valuation of higher market cap alts because the liquidity starts to dry up. It hits lower market cap alts first because the order books are not, they're thinner, and then eventually it works its way to the higher market cap alts. When you think about it, for Ethereum, if you didn't tell me the timing, if you didn't say what year, right? If we don't say what year it has to happen, but if we just said that something has to happen at some point in the cycle, it would be Ethereum going to the lower logarithmic regression trend line, right? When did the ADI bottom last cycle? It bottomed on January 2nd, 2020. Now, yes, there was technically a big drop in March. There's a black swan, right? I mean, but the ADI started going up, meaning more assets started to go up than decline. What does that correspond to? January of 2020 for Ethereum. It's when Ethereum was at the lower logarithmic regression trend line. That is when the ADI bottomed. The reason the Fed's slowing QT, it's not because ETH has broken down. I hate to burst your bubble, no pun intended. But cryptocurrencies gives us insight into the health of the consumer. Maybe even more so before it shows up in other markets. It gives us the insight. The market, for the Ethereum market, finally broke down. In the short term, that induces a lot of pain. If you overlay ETH Bitcoin, every time that ETH USD held support on this line, it made the ETH maxis celebrate. But if you follow Bitcoin dominance, you knew it was a bad thing. Because as long as it held support, ETH Bitcoin was going down. As long as it held support. Because as long as it held support, the Fed had no reason to change monetary policy. Not because of Ethereum, but because Ethereum's showing insight in the consumer. Ethereum is showing, in my opinion, that the consumer is starting to weaken now. Which is why the Fed was very quick to change. To slow QT. Which, if you think about it, is a lot different than what they said last month. Or in January. In January, Powell said they had ample reserves. And then they just lowered the pace by 20 billion. The Fed will respond to markets. They talk a big talk. And for this cycle, they really have walked the walk as well. But when the markets drop, the Fed will respond. Okay? The Fed does not lead the markets. The markets lead the Fed. And that's an important nuance to really grasp. The markets tell the Fed what to do. The Fed does not tell the markets to do anything. The markets tell the Fed what they need to do. And because ETH USD is finally breaking down, monetary policy will slowly start to shift as we go through this year, right? It'll slowly start to shift. And it already has, right? I mean, they just announced they're going to slow QT just a couple days ago. Last cycle, ETH USD did the same thing, right? As long as it held support in the quantitative tightening Bitcoin bull market, as long as it held support, things are going well. But ETH Bitcoin is going down. And that was what I learned last cycle. You know, I think a lot of people like look at me about this cycle at ETH USD and they're like, I wish I'd listened. You know, how did you know that was going to happen? Guys, I don't have a crystal ball, right? The only reason I was pretty sure it was going to happen was because I got wrecked last cycle, making the same mistakes, the same exact mistakes that some people made this cycle, where they thought that Ethereum would outperform Bitcoin in the bull market. Those same mistakes, that's exactly what I did last cycle. And what I realized last cycle was I could have just stuck with Bitcoin until QT ended, and I would have been so much better off than chasing the altcoin market. Right? That's what I learned last cycle. That's what I was trying to communicate this cycle. The most difficult part about this cycle is that this process took place on a much longer time frame, way longer than I think any one of us, including me, was expecting. And because of that, a lot of people gave up on it. But if you don't tell ETH when it has to go home, and just say that it has to happen at some point in the cycle, then it makes sense, it makes more sense how to navigate your portfolio. It's not about saying it's going to happen this month or this day or that hour or on this Fed meeting. It's more so just saying, hey guys, no one knows when. It's impossible to know. Whenever it does, that's when monetary policy starts to change. And monetary policy now is finally starting to change because ETH USD has broken down. Last cycle, we know the ADI bottomed as ETH USD sort of fell here deeper into the aggression band, which is exactly what it's doing now, and it's exactly what it did in 2016. I don't know exactly how low it's going to go, but the process is no different than what we saw in the last two cycles, right? The process is the same. It's just taking place over a longer time period. If you look at 2016, the drop actually occurred here in late 2016. Like, it wasn't that much of a difference in time. And, you know, it's not like there's nothing about Ethereum that's starting to look attractive. I mean, I suppose one thing to consider is that in the 2016 cycle, ETH USD bottomed just after it went below the August 2016 low. And this is the August of 2024 low right here. And you can see that we just saw Ethereum wick below it. So I suppose that is the sort of the silver lining here. If you're trying to come up with a reason why it doesn't have to go further down, maybe that's it, you know? And again, maybe that's the reason why hedging is a good idea, right? And we've talked a lot about that. But the other counterpoint to that is that if you go back even further, you can see that the low that it wicked below also was the April low, and ETH also had an April low, but it was way up here. So instead of the August low finding support at the April low, which is what happened over here, it actually found support about 20% below that level, right? So 20% below the August low would actually put Ethereum just a few $100s below where it currently is. Okay, so, you know, I don't know exactly how that's going to play out. You know, whether you want to draw the line and connect the dots and do the same thing with Ethereum and sort of connect those dots as well. We obviously talked about the similarities with the S&P 500. If you're not familiar with what I'm talking about, just go look at the S&P 500 in 1990 and you'll see what I'm talking about. Where it actually had a very similar pattern as Ethereum, and you know we've followed that quite closely, where it had a triple top right? It had here a triple top, if I can draw it right. Triple top, lower lows, right? This low was a little bit lower than that low. And then the final low was the recession low. And then the triple top finally got taken out. And you might say, Ben, you're reaching, right? I mean, why are you talking about the S&P in 1989 to 1990? Like, you know, whatever you're smoking, like, give me one of those, right? But again, I didn't find this because I was trying to figure out, like, why. I wasn't trying to, you know, confirm my bias, although it is kind of nice. I wasn't trying to confirm my bias. What I was looking at, what made me look at this in the first place, was I was just over here looking at interest rates, you know, just spending a normal Saturday morning, looking at interest rates, minus the 2-year yield, which I'm sure many of you guys have looked into. And when you look at it, you'll notice there's 2 times in recent history where this metric went up to this trend line. 2 times. The last one was the financial crisis. Let's hope that's not what's happening. Like, let's hope. I don't want that to happen. You probably don't want it to happen either. The other time was 1989 to 1990, which is exactly the thing we just showed that looks like Ethereum. So that's why the cycle feels different than last cycle. Because it took so much longer for Ethereum to drop to the regression band. There's so much more liquidity this cycle that just allowed for altcoins to just hold support on their USD pairs. They were only holding support because Bitcoin was going higher. But the minute Bitcoin showed weakness, the altcoin market broke down on their USD pairs. And that weakness is pretty obvious when you look at the running 1-year ROI of Bitcoin. When you look at the running 1-year ROI of Bitcoin, it was at 2x for a while. It just dropped. In the 2016 cycle, it never dropped this low once it got up here until after the entire bull market was over. You know what this looks like to me now? It looks a hell of a lot like what happened in 2019. That's what it looks like. And that was right around the time that the Fed started to change monetary policy as well. So, if you're wondering why this cycle feels different, it's because to a large degree, it is for altcoins. For Bitcoin, it's actually been fairly standard so far. For altcoins, it's been completely different than what many of you experienced in 2020 and in 2021. If you made those mistakes, don't feel bad. I made those exact same mistakes last cycle, sort of chasing altcoins and then realizing I would have just been better off with Bitcoin. The silver lining for me is that last cycle when I did it, at least it ended in the pre-halving year, and I learned my lesson a lot quicker. This cycle has been way more brutal in learning that lesson for a lot of people because it's taken place over like another 2 years. So it's been a lot more brutal for everyone. But I just wanted to show why this cycle feels different. And we talked before about what needs to happen for things to change. We've been seeing that weakness in the market already, and monetary policy is slowly starting to change. It doesn't mean that altcoins can't continue to drop against Bitcoin. They very well could. They very well could still go to the range lows. But you can start to see the end of the tunnel, right? You can start to see the end of the tunnel now that the USD valuations of these cryptocurrencies are starting to finally break down a little bit. And again, I mean, obviously the Fed doesn't really care about crypto, but I mean, if you were to look at the S&P 500, you know, this is starting to, you know, there's some structure here that's starting to look a little bit suspicious, right? Because, you know, this was a low, and then you had a higher low, and a higher low, and a higher low, right? These are all like higher lows. But you're starting to wonder, I mean, is this a lower low here, right? Is that a lower low? And if it goes lower, let's say it goes even to 5,100 or something, like if it goes lower, then you really start to break market structure. And that would definitely make the Fed want to come to the rescue. Powell said yesterday or 2 days ago, he already said he doesn't think this is the 1970s. The 1970s is when inflation started to go parabolic, starting right around now, and the market entered a 2-year bear market. If he truly believes that and does not think we're about to go into another inflationary cycle, if the market continues to drop, then there will be pressure to pivot monetary policy to adjust for that. Because, you know, there's some reason to believe that inflation might continue to be sticky, especially with tariffs. If the consumer's not tapped out, tariffs are technically inflationary. If the consumer is tapped out, you could argue they're deflationary. But in the short term, you know, if inflation is not going up and we actually start to see it go down, then the Fed will come to the rescue. If it starts to go up, then they're going to have no choice but to maintain restrictive monetary policy for longer. So we'll see what he does. We'll see what the macro data comes in a couple of weeks, and obviously that will dictate the reaction function by the Federal Reserve. But that basically sums it up, guys. That's why this cycle feels different. Don't feel too bad. Learn your lesson. It's tuition for joining the Cryptoverse. Next cycle, you'll do better. Thank you guys for tuning in. Make sure you subscribe. Give the video a thumbs up. And again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. I'll see you next time. Bye.